My name is Jeanmonod. I am on the board for the NTX AMP, and I'm also Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm honored to be able to bring to you Christy Best. Christy, please introduce yourself.
I am Christy Best, and I cover the San Antonio area.
And Christy's helping the NTX AMP out today, so thank you. And then we have our own local, Armando Aviles. Please, Armando, introduce yourself.
Hello, my name is Armando. I'm an account executive in the Dallas-Fort Worth area.
And thank you. I appreciate Armando and Christy taking their time out of their day to teach you not just how the bank statement program works, but little tips and tricks of how to get these bank statement loans closed. And really, we're also going to talk about a couple of tools we have that can help you price loans. And then we're going to also talk to you at the end about how you can find these borrowers and market on your behalf. So without further ado, we'll get started here. Hopefully everyone can see our website. Everything we're going to talk about today and everything we're going to do starts with angeloakms.com, and that's our website. It's really easy to use and navigate. And again, as I said, we're going to just talk about our bank statement program. So Christy, give us a highlight of our bank statement program.
Yes, okay, great. I'm happy to do that. One thing I want to point out with the bank statement program is that there really is a huge market out there for this. There are more self-employed borrowers in the United States than there are VA borrowers. And I want to point that out just to let you know the volume that is out there for these loan programs. And really what a bank statement program does is it increases a self-employed borrower's buying power. So what we're going to do is we're going to take a look at their bank statements. We can use business or personal. I often get asked if there's a difference with those. There is not a pricing difference between business and personal. There's a slight pricing difference between 12 and 24 months, and that difference will depend on your LTV. But there is some expense ratio differences there. Standard, we're just going to take a look at those bank statements and we're going to apply a 50% expense ratio. There are opportunities to lower that expense ratio, and that's something that's going to be loan specific, and account executive can go through with you. We're going to be looking at 2 years of seasoning on housing events, bankruptcies, foreclosures as well. This is available on a 30-year fixed and also on a 40-year IO. One thing is the borrower does need to be self-employed for 2 years. So that's one of the first questions you're going to want to ask a borrower if you're looking at a bank statement loan, is to verify that they have been self-employed for at least 2 years. These loan programs, the bank statement program is available on purchase, cash out, and rate and term, and it is available on owner-occ, second home, and non-owners as well. And there is a 1099 option on here, so there are a lot of borrowers that are 1099. You can use a 1 year or 2 years 1099 year-to-date bank statements as well. But we're going to be looking at that cash flow into their bank statements rather than their bottom line on their tax returns. And the benefit to that is, of course, self-employed borrowers are savvy. They take advantage of every tax write-off that is available to them. And oftentimes when you get their tax returns, it doesn't look like they qualify, or they don't qualify for the price range that they know they can afford and want to shop in. So really the benefit is to be able to increase that buying power.
Cool. So, we said we're going to do a deep dive here. I love that stat you brought up there, Christy. It's a really powerful stat that there's more self-employed borrowers than there are VA borrowers. And Christy, that's not stopping either. I just recently went out and looked at that in 2020, new business applications increased over 2020 by 22.7%. And that's an increase of over 2020, which increased over 2019 by 24%, which was the largest increase in new business applications in over 10 years. So if you're really looking up, I'll tie the numbers together. 2021 increased over 2019 by 54%, and that is not slowing down. We talk about the Great Resignation. All these people, they're not getting out of the workforce. They're just stopping working for W-2 people, and they want to be self-employed. So I really appreciate you covering that, Christy. And so Armando, we're doing a deep dive. We're going to go over Q&A. We'll get to all your questions. But let's start with the 1003, because that's how every loan does start. Armando, tell us the most important things we want to see on a 1003.
Yeah, thank you, John. And when it comes to the bank statement program, the 1003 is just critical. It's got all the data points that we need to determine if the borrower is going to be a good fit for the bank statement program. A lot of times I see for the most part, we get good 1003s, but there's some information that I just have to have up front. For example, if the borrower is renting, we need to know how much they're paying in rent. We have payment shock considerations there in that aspect. Also, one of the really important things is that the name of the business on a business bank statement loan, the name of the business on the bank statement has to match the name of the employer on the 1003. You have to list the borrower as owner and check the self-employed box. Now, a lot of times business owners give themselves titles such as CEO or president or managing director. We still have to have the ownership piece to that title. We have a group that's all they do is analyze bank statements for us, and we have to verify that the borrower does match the name of the name of the employer. It has to match the name on the bank statements, just to verify that that is the owner. Another critical piece of information that we don't want on the 1003 up front is the income. And we get a bank statement loan because it fell out on the conventional side, and a lot of times we'll get a 1003 that's got income from the tax returns, and obviously that's not going to work because that's why we're looking at it to begin with. So it's critical that up front that I don't have any income on the 1003. Now, the reasoning behind that is, and I know I believe John mentioned this earlier about the percentage of loans that close outside of our guidelines, is we have a lot of flexibility when it comes to the bank statement program. And if I have to ask for an exception and there's income, then when we get to the exception piece, we have to stop and get that updated before an underwriter sees that. So other parts of the 1003 is the proposed taxes and insurance on the subject property. A lot of times with the new IRLA, I believe you have to click a box or a button to include that in the PDF version of the 1003. And again, that information is really important when we're determining the debt to income ratio. Other than that, is the REO schedule is really important. If the borrower owns their home, you need to make sure and complete the REO schedule, including the mortgages, taxes, and insurance that go with it. And if there's not a mortgage, be sure and check that box that says doesn't apply when it comes to mortgage. And other than that is just the assets. Where do they have the down payment money at? Where do they have the reserve money at? Definitely the more information that I can get, then that's going to help us do do a pre-approval for you faster.
Yeah, Armando, great information. A couple of things I want to add on to that. You gave me credit for saying how many loans we close outside our guidelines. But I
think I jumped the gun, man.
So, yeah, and but what everything Armando outlined there is critical, because 30% of the loans we close don't meet our guidelines. And how do we get those exceptions? That we get that exception because we take it to a credit expert internally, and they look at the assets, they look at the payment shock, they look at they look at their home ownership. So those are critical. And Armando mentioned one other thing that I also want to highlight is, he says, because the loan fell out of conventional. Do yourselves a favor going forward. If you know you are going to work with a self-employed borrower, when you're getting their tax returns, get their bank statements, right? Get 24 months of those bank statements, because we'll talk about the team of experts that we have that calculate that for you. But at the same time, go down those parallel paths. The housing market is so hot right now that there are multiple offers, and by the time you calculate the borrower's tax returns, we can have our bank statements done, and then you're going to give your borrower that room from, hey, maybe they only qualify for a $250,000 home or a $300,000 home, but if I went bank statements, I might qualify for a $750,000 home. So that's critical. Do yourself a favor, fill out that 1003 completely, and when you're talking to the borrower, get the tax returns, get the bank statements. Armando, Christy, myself, I don't mind going down a path. If they can qualify for the home of their dreams, full doc, great. But if they can't, get us the bank statements. We'll help you navigate those paths. So thank you so much, Armando. Christy, anything else to add there?
Yeah, I'm glad, and I don't know if you plan to mention this later, but when I was going through it, I missed a key component, and that's the fact that we have a bank statement review department that calculates the income for you. And I think that it's really important, like Armando said, having a complete 1003 allows us to give you an accurate prequal, and having that income and that prequal before your borrower begins shopping is really the key, so they know what their buying power is. So you get those bank statements to us, and our bank statement review department is going to calculate that income for you. They're going to give us both a 24 and a 12-month income, and then we can make a decision on what's best for your borrower. So just getting all of that information to us in the beginning is really important.
Yeah, and that's the income. Christy talked about them calculating the income. That's the income that's going to be used throughout the entire underwriting process. Yeah. So you truly have a prequal from an account executive that is, that's your pre-approval. So so Christy, let's touch a little bit, and we'll get to questions. We really appreciate all the questions coming in. Christy, talk about what kind of credit we're looking at for the borrower also.
Okay, so credit scores, we can talk about that a little bit. On a bank statement, the minimum score is a 600. 600 is going to get you to 70%. A 640 is going to get you to 80. 660, 85, 700 is going to get you to 90. We're also going to be looking at trade lines. The borrower needs to have 3 trade lines for 12 months with activity in the last 12, or 2 for 24, again with activity in the last 12. We do allow, for some small credit issues, on the consumer and on the mortgage history. Mortgage history, they're allowed to have 1 mortgage late in the last 12 months. And on the consumer credit, we're going to be verifying they haven't had any 60-day lates in the last 24 months.
Yeah, great. And Christy touched on those LTVs, and she mentioned 90% LTV. That's one loan, no mortgage insurance. And everyone, obviously rates are going up everywhere. You really need to be talking not rates anymore, about payment and affordability. And when you calculate, with MI factors and stuff like that, I'm telling you, there's really not much of a difference. And specifically with self-employed borrowers, you tell them to go to their CPA. The CPA will sell them on their payment because they're writing everything off on their taxes. So, let's get into. Thank you, Christy, for covering the credit part of it. Let's get into the questions. Armando, we mentioned 24 or 12 months. What's the difference? And if you say 12, I'm going to come through the camera. So what's the difference between 12 and 24?
So depending on the LTV, it's anywhere from an 8 to 3/8 on the rate. I advise my loan officers, get me 24. Let us decide which direction to go. If, we have declining income or NSFs that warrant us to go to 12 versus 24, let us make that determination for you. Just get them for me. All you have to do is gather them for us and let us do the analysis.
Yeah. And Armando, you touched on NSFs. That's another question we have coming through here, so thank you. Christy, talk about the NSFs and maybe give us what we have maybe is a little wiggle room too. So.
Yeah, that when you speak of wiggle room, that's the thing about, just non-QM in general, is that these are manually underwritten files. There isn't a computer out there program that decides whether or not this borrower, is worthy of this loan. There is an underwriter that's going to look at it and view the whole picture. So we are going to be looking not to have more than 6 NSFs in that 12-month period. But, there are going to be, maybe there's one check that caused a significant amount in a row. They're all on the same day. Those are things that we can take to that non-agency help desk and ask for an exception on that. And one thing I love that we do is that if we are able to get that exception, that's going to follow that file all the way through, just like the bank statement income. So you're not going to have a concern that an underwriter that gets that file isn't going to agree with that. Once that particular exception has been made, you're not going to have an issue there in the future.
Yeah, great point, Christy. Armando, what are the DTIs on our bank statement program?
40, 50, 40 on the front and 50 on the back.
Right, great, thank you. Great questions, keep them coming. Christy, you mentioned purchase, refi, cash out. Will we do Texas cash outs?
Yes, we do Texas cash outs. And there's a lot of equity in Texas properties. So, even with rates going up, we are still seeing, a decent amount of those cash outs coming in.
Yeah, and I heard someone talk about this the other day. When you talk about a cash out, it's not being taxed, right? You are getting all that money cash in hand. So why not? Armando, talk about, because Christy mentioned a great appreciation, but it's also a crazy hot a purchase market too. Talk about delayed financing. That's been critical lately with us.
Yeah, definitely, man. I've there's several loans that I've been able to save recently with delayed financing. With the market as hot as it is and sellers not wanting to extend on a contract, the borrower has the ability to pay cash, and then we turn right around and do a cash out for them and recoup that money that they put into that home. So it's an awesome tool. We can use it with all of our programs, owner occupied, non-owner occupied. Whatever your transaction is like, we can use delay financing.
Yeah. Hey, Jeff, we're going to get back to you here. We're going to show you how to submit a prequel. We're going to go through our quick quote tool and how to submit a prequel. So we'll get to that question. I'm not ignoring you. Christy, talk a little bit. You touched briefly on it. Talk about our expense factors with bank statement loans.
Yes, and sometimes this can come across as complicated, but it's simple, and you don't have to memorize it. We'll walk through it on each loan. So typically what we're going to apply is, and what review is going to apply. So bank statement review, they're going to stick to the standard 50%. So if your borrower has $20,000 a month in deposits, they're just going to automatically give them, a credit for 10. Now, there are cases where that expense ratio is going to be higher. At 70%, and that's going to be your auto dealerships, your gas stations, businesses that have physical locations and significant numbers of employees. And then we're going to apply a 70%. Now, you can go down to a floor as low as a 15% expense ratio with a CPA letter that accompanies and lets us know what the actual expense ratio is. Now, that being said, it does need to make sense. We're not going to accept a 15% expense ratio on an auto dealership, right? That's going to be at that 70%. But it does make a lot of sense for your graphic designer, for your real estate agent, from your borrowers who work from home and don't have a lot of expenses. And the other thing is, let's say we have 12 months of personal bank statements, and we get just 2 months of business to show that that borrower also has a business account. In that case, we can give them credit for 100% of the deposits in that personal account. And that's because we're assuming that all the expenses are coming out of the business and we don't have to apply it to the personal.
Yeah, and Christy started this with, it's a lot of information, but that's why these subject matter experts like Armando and Christy, they're going to hold your hand. But again, when you're going to that, I'm going to say it probably 5 more times, when you go work with that self-employed borrower, get the tax returns, get the bank statements, do yourself a favor. You'll cut 3-4 days out of there. Armando, speaking of days in the process, there's a question here from Alice that wants to know, how long does it take for us to get that calculation for bank statements?
So the standard turn time is 48 hours, although here recently I've been getting them back closer to 24 and less than 24. So really depends on volume, but consistently it's right around 24. Yeah.
And Christy, another good question here. Can the borrower waive escrows?
Yes, they can, up to an 80% LTV as long as they have a 700 score.
Good answer. Good answer.
So, yeah.
Yeah, and we talk about self-employed borrowers. We talk about how they're cash flow driven. It's all about keeping expenses down, keeping cash flow moving. Armando, talk about the interest. Christy talked about interest only. Go into a few details of our interest only feature, and then how do we qualify the borrower with that interest only feature?
Okay, so the interest only it's a 10-year interest only period, 40-year. The payment's based on a 40-year, and we qualify the borrower on a 30-year full AM.
Yep.
So interest only, you have to have a 680 FICO, and it can only be primary and second homes for qualification purposes.
Perfect. And Christy, talk a little bit about, thank you, Armando. Christy, talk a little bit about maybe you have one borrower who's self-employed and the other's W-2, kind of.
Yeah, That's I actually had that question yesterday. So we are able to do that. If you have a self-employed borrower that that's going to use bank statements for their income, and then you have a W-2 borrower as well, you can use the income from both of those borrowers on that loan, and it will be underwritten based on the bank statement guidelines.
Perfect. And then Armando, I just had a question here. Talk about, do we allow LLCs for, and we know we don't do for owner occupied and second homes, but talk about LLCs for investment properties.
We do allow title vesting in an LLC on a non-owner occupied. The LLC has to have been established for the sole purpose of managing investment properties, and everybody on the LLC has to be on the loan, and there can be 2 people max. So that's definitely one of the features that's going to help you sell these non-QM programs in regards to non-owner occupied.
Yeah, and we're going to do it just so everyone knows this is being recorded. If we don't get to your answers, we will get your local account executive to reach out to you. We are doing a series of these. The next one is next week. We're doing the debt service coverage ratio program, and then the following week we're going to talk about our full doc program. And the reason why I'm bringing that up, hopefully, we can get the word out there, and because we will talk about our I-10 program. We do not allow I-10 borrowers on our bank statement program. It is a full doc only. So I just wanted to get Sam's question answered there. So we wanted to get that out of the way and let everyone know about the upcoming webinars. A couple other questions here. We talked about how long it takes for bank statement review team. Armando, do we allow condotels on our non-warrantable condos?
We do not. We do not.
Some of the things we do, the biggest thing, if you do have a non-warrantable condo, do your AE a favor. Tell us why it's non-warrantable, right? Don't make us have to find it. I heard someone the other day on a call say, I think we're like your confessional booth, and you can tell us anything, right? So
don't lie to your AE.
Yeah, the more you tell us, the better it helps us, be able to ask for additional information or just tell you no. But when it comes to condos, we're going to want to know what's making it non-warrantable. Some of the things that we allow that maybe Fannie or Freddie doesn't allow, we allow 100% concentration of investors on non-warrantable condos, right? So, but one entity cannot have more than 20%. Another is usually reserves. We'll allow some flexibility in the reserves, and I believe Fannie and Freddie just instituted some inspections at the end of last year, the beginning of this year. We don't abide by those. So just help us, help you when it comes to non-warrantable condos. What else? I've got a couple other. Oh, Christy, talk about multiple bank statements, please.
So so what we can't do is, you have a borrower who owns one business and they want to combine the income from both their personal and their business account. That's not something we can do. You're going to have to, if the borrower has one business, they're going to have to choose one or the other. But if your borrower owns multiple businesses and has multiple bank accounts for each of those businesses without transfers going back and forth, that is something we can do.
Yeah. So Andy, hopefully that answers your questions, but I don't, so really, will you allow the borrower to use multiple bank accounts for the same business? If they have,
No.
we will not. Yeah, if it's called Andy's Cleaners and they have 2 separate locations with 2 separate business bank accounts, and as Christy mentioned, there's no commingling of funds, we will allow that. We will allow a spouse, both self-employed borrowers that run different business, we will allow those to use both of those bank statements. So I know we're getting near the top of the hour here. Anything else, either Christy, that you've seen in the last few months, or Armando, anything you guys have seen, or deals maybe that you've closed that probably someone without your area of expertise maybe wouldn't have gotten closed?
Yeah, I think the biggest thing that I would want to, to push forward is that these are not difficult loans to close. And I think there's a big misconception that they're a lot of extra work and that they're difficult to close. And it's just not true. You know, they really are easy to close. And we do the hardest part. Well, we personally don't, thankfully. We have a team of experts that calculates the income for you, you know, which is would be the challenging part. But we do that for you. They're not difficult to close. And I think we're seeing even more volume coming in on these as rates go up. It's becoming more difficult to qualify going full doc on your tax returns than before. And this is really just increasing the buying power. And I could give a lot of examples, but since I have a great one from just this week, I will share it. You know, I had a loan officer call me. She'd never done a non-QM loan. She told me she's always turned these away. This is it was a referral, and she's trying to see what she can do to get this one done. Borrower had pretty decent income on his tax returns, but he was buying a house for 1.8 million, and he just couldn't debt ratio. And we got the bank statements. We applied a 70% expense ratio based on what he's done, and he still made $100,000 a month in income on those bank statements, and was able to buy a house that he thought he was going to have to pull out a contract for. And, you know, and luckily for this loan officer, she's learning about these programs that are available that she's been ignoring, you know, in her own words, that she's just been ignoring in the past. So there really is a lot of benefit to your borrowers and also to your pipeline on educating yourself on bank statement programs.
Armando, anything else to share, things that you've been seeing?
Yeah, I was able to save a loan that started as bank statements. There was NSFs in the last 12 months, and we weren't able to go bank statements. It turns out the borrower was 1099, and we were able to use 2 years 1099s plus a year to date from their employer, and we saved the deal. And the deal was actually for a realtor. So it was actually pretty cool to be able to not only save it from being a bank statement deal, but converting it to a 1099 that, you know, I know that realtor definitely, you know, didn't know a lot about non-QM before the transaction that she had with us. And, you know, it turned out that she's one of our greatest fans. And, you know, anytime, just like you said, John, that she's got a self-employed borrower, she encourages the loan officer to get the bank statement and the tax return. So it was a win-win for everybody.
Yeah, those are just two really good examples. But, you know, and I can say this because I work with both of you, that's the key to having an expert AE working with you. I mean, there's a lot of non-QM lenders coming out of the woodwork, and quite frankly, you probably need to have two available in your portfolio, because we, Angel Oak, cannot do everything. So, but really look at your AE and really, you really got to be on your game. And that's because Armando and Christy were able to really pull those deals together. So, so when you are interviewing a non-QM lender, you know, really do your due diligence, but you should have at least two, not just Angel Oak, pick any of the other ones out there also. But so Armando, let's go through. We've gotten through most all our questions, and again, if we didn't, we will get answers for you. Armando, let's talk about how, you know, a lot of people have asked about pricing, rates, LPC, BPC, borrower paid compensation, lender paid compensation. Take us through this tool. Christy's available 23/7. Armando's available 23/7. This is available 24/7. So Armando, let's go through a quick scenario, price out a loan on bank statements.
Yeah, definitely. And, you know, I get calls from loan officers daily, and, you know, they want to talk about a different scenario, or they want to ask for a rate sheet. And, you know, the awesome part about Angel Oak and our marketing department and our website is that we have an online pricing engine that's, you know, live, that as you make changes to the data points, the rates will adjust. So as you can see, John's putting in an average bank statement scenario, 80% LTV. And if you will, John, go to 24-month business bank statements.
There we go.
And then you can scroll down, and then where it says view rates, that's the rate stack. If you click on that view rates button real quick, John, and as you can see, you have all the different buy down options. So if you scroll up, you know, you have, you know, all the different ways that you can improve the rate, or, you know, if you want lender credits, any credit to the borrower, you'll see what that pricing looks like and what it's going to cost. So, and it's great. It's fast. I actually run this on my phone all the time when I'm not in front of my computer and I get a call from a loan officer. My family says that they laugh at me. They say that I say the following sentence 1,000 times a day. Are you in front of your computer? Great. Let's go to angeloakms.com, go to the non-QM quick quote. So super easy. And it's just, another example of the tools that we have available for you guys as loan officers to go in here and price out scenarios and see what LTV they qualify for. John, do me a favor and go back, hit cancel, and let's adjust the LTV a little bit. Go down to 75%, if you will.
Yeah, so if everyone remembers what the rate is here at 80%, let's
6 1/8. Let's go to 75, and as you can see, the rate adjusts.
Yeah.
So you can, if you have a different scenario and you're trying to figure out what's the best option for your borrower, you can play with the LTV if they have more money to put down. And that's, I think we missed on that point earlier, John, is that, the thing about self-employed borrowers, more often than not, there's more money in the bank statements than there is in the tax returns. And bank statements, self-employed borrowers have skin in the game. They have money to put down. So I believe what our average LTV is 75 at company-wide. And so you have the flexibility to go in here and say, hey, Mr. Borrower, Mr. and Mrs. Borrower, this is your rate, what your rate would be at 75, or, you want to put a little bit less down, then you can run those numbers for them real time. So.
Yeah, Armando, and as affordability is getting harder, getting harder and harder. And I don't know if we touched on this, but I did have a question in my head. Did we talk about gift funds?
We did not.
So just cover that quickly, Armando. I apologize.
So gift funds, we do allow gift funds on owner-occupied. If they do go that route, they have to bring in 5% of their own money plus 6 months reserves. The rest can be a gift. So
you're talking 5% down on a home.
I know.
Yeah, it's crazy with gift funds. I mean, it's just, unbelievable. And again, this is one loan, no MI, granted it's 75 LTV. Armando, let's look. We had a question earlier about, take me through the process. So let's go through on how someone can get a prequel to us.
Okay, perfect. So let's say this is the scenario that you want us to look at. At this point, you don't have to pick a rate option. So I would hit just the select option button right there, John, the blue one. And then when you do that, a lot of times you have to scroll up.
Oh, sorry.
Because it looks like a blank screen, but it's actually there's information there. Now, at this point, this is a feature that you can actually just skip. You hit next. I advise my loan officers to hit next on this. And this is when you get to step 3, you're going to put in your account executive's name. My name is 7th from the top. If you're in San Antonio, you could pick me for your AE. So once you've filled out all the data points on the left with the red asterisks, if you'll just highlight those, John, on the left where it says scroll up, right there. Yeah. And once you fill out all those data points, you're going to scroll down to where it says loan documents, 1003 and credit report. Now you're going to drag and drop the 1003 and credit report PDF versions of that, and then you're going to scroll down to where it says bank statements with the red asterisk. John, can you highlight that for me real quick?
Yep, right here.
So it is very important that you use the box directly beneath that for the bank statements, because that's the only box that has enough bandwidth. If you use the additional documentation, they're not all going to come over. So it's really important that you use that. Scroll up a little bit, John, to where it says questionnaire there on the left. Now, this is a document that we're going to need with every bank statement loan that we do. And if you'll click on it real quick, John, so I can show them a copy of it or see what it looks like. And this document helps us determine the percentage of deposits that we're going to give your borrower credit for. So we don't actually need this up front. We can get that once I get the bank statement review back. But I want to cover that and make sure you guys saw that. If you'll go back to your other tab now.
Yeah, but Armando, I do want to jump in here and thank you for bringing that up. It's critical though for helping us qualify your borrower though. If you can get it up front, it's really critical because if we are going to qualify that borrower and they work in an industry that has less than a 50% expense ratio, this is how we're going to determine that. So appreciate you bringing that up.
Yeah, definitely. And then again, I'll just reiterate on the 1003, can't have any income. Need to make sure that the name of the business matches the name on the bank statements. Need to make sure that you have the borrower listed as owner and check the self-employed box. Need to make sure that if they're renting, you've plugged in the rental amount, or if they have a mortgage, that you tie it to that mortgage on the REO schedule. And once you have all of those items in there, if you'll scroll down, John, to the very bottom, on the very bottom right is the submit button. You're going to click on that and stay on there till it cycles through and lets you know that it's gone through. And at that point, we get it as an email, with a link that we can use to access the document securely. And just to expand on that a little bit, once I get that email from you, before Christy and I will send it to bank statement review, we're going to take a peek at a couple of the bank statements, take a peek at the credit to make sure that it does fit before we waste anybody's time on that. So.
Yeah, Armando, great point. This is a great tool, like that quick quote tool. Remember, you don't need login credentials there. And now we're going to have where you do need login credentials is to get, obviously to submit a loan to us, but also to get to our great marketing portal. And I'm going to have Christy kind of drive me through while I log in. I'm going to have Christy drive us through the marketing portal.
Yeah, so, one of the things that I really love about Angel Oak is how we invest in our relationships with our brokers and with our originators. And, as an originator, you wear a lot of hats. You are working files that are in your pipeline. You're trying to generate new business. And oftentimes you're doing a lot of your own marketing. And this is a piece that can make that a little bit easier for you. So let's start with the flyers and we'll work our way back up. So I think that these seem to be utilized the most. I get a lot of questions on brokers wanting to have access to these. So you can select any program that you're interested in marketing for. Let's take a look at bank statements today. If one place that you can go to generate bank statement self-employed borrowers is going to be to a financial planner or an accountant, because often what happens with a self-employed borrower, when they get their tax returns, they decide that they want to go shopping, they come back to their CPA and they say, Mr. or Mrs. CPA, you did an excellent job on my taxes, and I appreciate all that money you saved me, but I can't qualify for a house now. The thing you don't want to do is to tell those borrowers, well, don't take any deductions for the next 2 years and come back and see me. So that's where the bank statement comes in. And if you have a relationship with a CPA or a financial planner, they can refer that business to you. So what you would do is, there on the left-hand side, you would put in your own personal information. John will enter a few fields just so you can see how that looks, or all of them at the same time. And you'll put that in there, and then you'll hit that click to see changes. And then you can see it's going to populate there. And that will populate to all of the flyers. You won't have to go into each individual flyer and add your information in. It's going to interface with all of those. And you can also drag and drop your own logo and your own photo and really personalize these. And earlier I mentioned that we really do invest in our relationships with this marketing material. You'll notice it doesn't say Angel Oak anywhere. So you have the option, if you want to do some co-branded stuff with us, we're happy to do that. But this is individual, this is for you, and it's personal, it's simple, and it's effective. So I think the flyers are one of our number one, but then also, John, if we could go back to the social media as well.
Yep. Hold on. Oh.
So you'll see the social media here. That's obviously a big part of marketing today, is just being active on social media and getting your name out there. What's great is these images have already been pre-sized for you, depending on whether you're using, an Instagram, a Pinterest, or, a LinkedIn. You can come in here, you need to do your marketing for the day. It's going to be a couple of clicks. You're going to download that image. You can even copy and paste. The verbiage is already in there for you. And you have some options. If you're looking to create some more referral relationships, you can use that realtor, the verbiage for a realtor that's going to be targeted towards what they're going to be looking for, or you can target directly, for a borrower. So these are all in there. They cover most of our programs, and they are changing constantly, so we're updating these and keeping it fresh. So that'll hopefully take a little bit of work out of your day. And then if we can go back, let's Let's take a look at the whiteboards are pretty cool, actually. A lot of my brokers like those. If we won't play the whole thing, but maybe we can play like a little 10-second clip of that bank statement.
A successful business owner, Bill, wanted to purchase a home. Although he heard it would be difficult because he was self-employed and likely wouldn't qualify for a mortgage based on his tax return income since he takes every imaginable deduction to reduce his taxable income. Bill found many realtors wouldn't help him because of their preconceived notion that bank statement programs for self-employed borrowers are difficult to close. Fortunately for Bill, Mike knew better. Mike's lender partner offered a bank.
All right.
Yeah, so these are great. They're interactive. They're only about a minute long because, in general, that's about as much, attention as we can get. But you can use those to market. And these flyers can be great as you're learning about these programs, that you can have it in front of you as a little bit of a cheat sheet, as you're talking and trying to sell these to your referral partners or to your buyers. You have information in front of you. And then we can take a look at the presentation. As account executives, we are here and available to do realtor presentations with you. I just did one yesterday. I have an office that asked me to come in. One of my originators, they had 17 real estate agents that came in. And what we want to do is educate them. On a surface level, we don't go as deep into the products with a realtor, but we want them to know what programs are available out there because they are pre-screening your buyers. Yeah. And we want to educate them on what a bank statement loan can do, on what our other loan programs can do, and how they can, widen their net on buyers that they're willing to work with. So we can do those for you if you have your own realtor presentation that you want to do. Maybe we can just take a peek at the short one, John.
Sure.
It sometimes takes a minute to upload, but what you will see again is of course, you won't see Angel Oak on here. That's up to you, again, if you want to co-brand something, but this isn't something that, we're doing to put the Angel Oak name out there. It's to put your name out there.
Christy, let me know if you can see it on the screen.
Yep, I can see it. It's a little tiny, but I can see it.
Expand it.
But you'll see that, the thing about it is that, there you go, that's perfect, is you can customize it. And also, this is a great, just a little bit of a cheat sheet. As you're learning the programs and what the benefits are, you're going to have stuff in front of you that's going to walk you through it. And there'll be spots here you'll see there at the bottom where you can drag and drop your own logo and put your own contact information. If there's a slide you don't want to use or something that you want to change, you're able to do that. But this gives you, this is a lot of work. And I love that we kind of try to take that off your plate.
Yeah, Christy, this is a powerful presentation. I always tell people, 9% of the loans we close for bank statement borrowers are actually realtors. So if you get 10 in a room, the odds are you're going to get one of their loans. And how great is that to solidify a referral relationship like Armando talked about, taking them from bank statements going 1099, and that was a realtor. So, marketing these outside. So just to give you some additional information, construction and home improvement is 15% of the loans we close for self-employed borrowers. And then the first place is 17% are professional and business services. Christy does a fantastic job doing these realtor presentations. I've heard Armando do them. He does a great job. Really take advantage of that Angel Oak AE who can help you, like Christy says, cast a wider net and educate all your referral sources because, as Christy mentioned earlier, but whether we like it or not, they are pre-screening your borrowers. And if they don't know about a bank statement program, they're not going to talk to them about maybe increasing their purchasing power. If they don't know about a debt service coverage ratio program, they're not going to continue to add to their portfolio. And that's what we're going to cover next week. So again, it's just more information. Our phones have been ringing, and it's because of everyone's trying to pivot to try to, expand their business because refinances, as everyone knows, are going away. So,
hey, John, really quick, will you do me a favor and scroll up? I think it's the fourth slide from the top. Right there, that one.
Yeah.
The last time I did a realtor presentation, there was a collective gasp in the room when I pulled up this slide right here. And you talk about powerful, and all the information on this PowerPoint, it's, we have the ability to gather a lot of information since we're vertically integrated, and these are facts. This is legit right here. I mean, there's a couple of the slides in there that talk about real life scenarios that everybody that's been in this mortgage industry has lost a loan due to that scenario. So not only do we give them an example of a scenario that where they might have lost a loan, we give them a solution. And that's powerful. If you're educating your realtors and allowing us to help you educate them, that just forms a stronger partnership between you and the realtor and the loan officer and us. So that's my favorite slide right there. I just wanted to point that out. That's pretty awesome.
No, it's great information, Armando. I appreciate it. Christy, anything else you want to add?
I think that I love that Armando mentioned that. And one thing to keep in mind with these bank statement loans, and I had this conversation with the realtors I was in a room with yesterday, is self-employed borrowers are the ones that are buying the $600,000, $700,000, $800,000, $900,000 homes.
Yeah.
It's not your W-2 borrowers that are buying those higher priced homes. And the thing for the real estate agent is, yes, if they have the choice between a $400,000 home and closing an $800,000 home, they're going to take that for obvious reasons. But you also they are able to put their borrower in the home that they really want. And that's the real value, for future referrals. And I know we had an example of that when someone was shopping with their W-2 income and they were stuck in a $500,000 range, but what they wanted was in the $1 million range, and they knew that they could afford it. And they went from a full doc to a bank statement loan, and the realtor was pretty happy with their commission doubling. And at the end of the day, the borrower got the home that they wanted.
Yeah.
Right.
Christy, because you bring it up, that $300,000 to $500,000 range, it's a fist fight out there for those homes, and there aren't there's still, we're in Texas and appreciation and everything else, but we're seeing that those people have to move up. Some people can't move up, and with bank statements, you're providing that outlet to get in that home. That's a great statement. So, hey, I know we're getting close to finishing up here, but again, thank you to the NTXANP for allowing us to present to you today. We look forward, and again, really, if you are on this call and you're in Houston or you're in San Antonio or in Austin, join your local chapters. It really, really does make a difference. And we look forward to seeing you guys next week on Thursday at 1:30 Central Daylight Time. We'll have Armando back here. We'll have Christy back here. We'll talk about debt service coverage ratio programs for investors. So without any further ado, thank you, and everyone have a wonderful afternoon.